Yo, what the fuck is going on? Professor Pip is back in the building. Trying to do a little compare and contrast video before I get to my weekend analysis. The main thing I'm looking for out of this video right here is just kind of show how last weekend's weekend analysis played out. Last weekend was the last week in February, and as you can see from right here, pretty much this is where price action opened up. We got the notes over here. Ain't really trying to read through all that. Just want to look at how the marking of the zones played out, how potentially could have took trades, how potentially could have got active. Based off last week's open, we had the extreme high on the daily chart marked up here. The extreme low was down here. So basically, what we say, what our psychology is, price action opens or price action push from this zone all the way up here, swing low to the swing high, and in between. Hold on 1 second. Let me fix my jump. In between these two gray box zones, price action is allowed to do whatever it wants to do. It's allowed to create whatever type of trend. It's allowed to consolidate how many times it wants. Basically, all we're doing is looking for with these gray boxes. If price breaks, we are continuing bullish. Now, within that time, we have to find areas, situations, setups, probabilities of being able to catch buys, like from this area here, or from this area all the way back down here, to be able to identify if price action is going to break the top or if it's going to come down and it's going to break the bottom. So based off of last week's weekly open, which is right here, this right here will be this week's weekly open, March 6th, second week of March. Last week in February, price action opened up, big ass gap, came down, closed off that gap, and then immediately shot up. Based off the way that I trade, bullish continuation zones, what I like to see, price action break above that zone, come back, maintain that zone, and then push back out of that zone. So potentially a trade on a DXY would necessarily look like this right here for me. I don't know what the targets would have been because I got to look left for that, but the stops would have been a little funky, a little tricky. Since this area here, let me delete this. We don't really need it. And what we'll do is mark it like this. Since this area here was the area that was most recently broken, stops potentially would have been somewhere up under there, probably this candle here, since that was the candle that pushed through. Psychology behind it will necessarily mean that if we start to break the low of this candle and start to come back in this range, then this right here would have been a secondary fake out. It was first fake out already identified. Here's the next fake out. Yeah, here's the next fake out that would potentially, if we would close below that low, you're looking at a 26 tick stop on the DXY and potentially 129 ticks to the upside. Looking left, potentially could target some area back in over here, structure back over there. Depending on how you trade, you kind of pretty much work that out. For me, necessarily, I would have, went all the way back over there, higher time frames, found somewhere to take advantage of. So for the most part, DXY right now is continuing bullishly. We have ran into some resistance looking left. So as I mark up the weekend analysis, I'll go over and try to find that area. But for the most part, if you were trading DXY last week, looks like about Tuesday to Wednesday, you could potentially had a big trade set up on that one. Going over to UJ, 4-hour chart, we pretty much was looking for a price to, this was last week's price action. This was last week's price action. This is 2 weeks ago. Based off of last week's, we were looking for price action to come down, respect this support here, and then push to the top. Didn't necessarily get that. Can pretty much delete that. Price action came down, manipulated below the support, came back and retested it, kind of broke through it, and then potentially could have had a short for 43 pips there. But then once it pushed back into this zone, you kind of expect for it to resume bullish and necessarily respect the supply back in up at the top, kind of manipulate it a little bit, and then it crashed back down to the bottom. So overall, last week's price action on UJ is pretty much just ranging top to bottom, top to bottom. So the only real good trade setup I would have saw was a continuation sell zones below 115, 150. Price came down, respected, and came back down again. And then once it came back up here, you didn't necessarily see the bearish call floor start to kick back in the market, so that would have been no trade here. And then as far as this one, price just broke through and it hasn't retested yet. Now, if price action comes back up and it decides it wants to stall out right here, you know, you could potentially have a continuation sale back into the extreme lows, targeting the top of this box at 114,433. Hold on 1 second. All right, cool. We back. All the damn piling got me jammed up. But for the most part, let me see if I can get, get the boy on the camera a little bit more. You can see me in action. For the most part, consolidating on UJ. As far as the analysis, we haven't broke the low from a daily time frame that say we're gonna go bearish, and we have not broke the high from a daily time frame that's gonna say we're gonna continue bullish. So on UJ, I would be careful, especially with it consolidating pretty much for the most part last week. There was potential to catch some scalp buys, some scalp shorts, but you had to be looking and watching and maintaining your charts for that. Switching over to GJ. GJ does not look like the weekend analysis because we were trading off of it. Back to GU. Let's see here. Based off of last week's price action, probably should have been looking for shorts. Daily bears, weekly bears, 4H, kind of in the middle. As far as the analysis or the markup chart analysis, you had a break of the continuation sale zone, but it hasn't fully retested to potentially get in. If it sets up, if you get candles coming back into this area if you get candles coming back in this area and they start setting up as far as rejecting, as far as throwing wicks, you got 85 pips back to the extreme lows. Potentially, since this candle here is a candle that broke through that structure, we can put stops right above that area, 45 pip stop loss. And then an 85 pip potential target. So, if you follow GU, if you watch it like that, potentially higher time frames are bearish, lower lows and lower highs, all the way back from, October last year, still connected to the downside. So, if you like GU, you can get in that way, potentially sales back to the downside. But with this trade, with the market, with the events that's going on in the world today, you better have been waiting for the actual setup. Wait, let it develop. Allow price action to come up here. This is a 4-hour chart, so at least 2 candles rejecting this area here, and then take, a engulfing candle based off the lower time frame, shift the structure on a 1 hour or the 15. So it's possible, it's feasible. You just would have to definitely be waiting for it and definitely allow it to set up for you and give you that candle formation you need to get into that trade. AU. 4-hour time frame. This does not look like weekend analysis as well, simply because we were trading off of it. I think I actually took this trade and hit some. Oh yeah, I did this big ass drawdown. I hopped in this trade on one lot. Stops price action bullied all week. I got in like right over here, and then price action fucking melted, bro. I thought I was gonna get stopped out, so I let it run. And then once it came back in profits. Yeah, I did not hold this whole trade right here for a full 42 pips. I probably got like, let's see, about 9 pips out of it, because once I saw this big ass candle come out here, I was like, oh shit. In real time, it's like, yeah, okay, well, you just kind of held through all that. But at the same time, when price action it opens, you get into a trade, it kind of consolidates on you, not really pushing higher, not really pushing lower. Then you see a candle that pushes into profit towards your TP1, but it falls short a couple pips, and then it just massively drops off like this. 28 pip stop loss is like, bro, I need to get out this trade, start managing this trade, start taking positions off as quickly as possible. And then, just watching it live, I was like, okay, well, it didn't take me out. It is starting to react bullishly. So as soon as price gets back in profit enough, I'm getting out quick, because what you see here is this bearish candle here came down and broke structure and, was huge compared to these bullish candles looking left. This candle here didn't necessarily break the high. So as soon as we got back, in profit and we was failing to break these highs, yeah, it made sense to get out at that time. But if I would have, stayed in the trade and held on to it, I would have smashed TP. So we want to show that. Euro JPY, see what we got going on here. Based off of last week's analysis, we got some action on Euro JPY. It didn't necessarily come back to trade it, or I should have, because once the week opened, I kind of saw the consolidation here. Was waiting for it to break. March 1st to 28th. The first was Tuesday. This is New York session. I wouldn't have been looking at it on New York session. Let's see when it came back to retest. It would have been Wednesday at 2 in the afternoon. Wouldn't have been looking there. And then the Asian session for that night. Yeah, no real, don't really look real strong bearish. But the setup played out. We had a break of 128.715. We came back and retested it perfectly. We did not close back above. We didn't go back into the zone. So, potentially if I was sitting and watching and I was waiting, would have just had entry based off of that level, that zone. This is the candle that broke through that zone, stopped right above, 38 pip stop loss. Targets. I cannot tell you what the targets would have been. Probably down here at this zone, looking left. But then what you actually would have got was, if you held on to it, it was 136 pips down to that bottom. But if you held on to it, then you're looking at 340 something. God damn, I can't believe I missed out on all that. Boy, look at that. Woo! Make you want to, get them do a little dance, but I ain't doing right now because y'all ain't paying for all that. But it is what it is. We'll continue to mark up these charts, continue to get active, and continue to try to find these big ass setups like this right here. But for the most part, the way I trade, the way I set up, it definitely works. I've been doing this for like 3 years now. I haven't been marking up this way for 3 years, but it has taken me a while to get to this point. And as you can see, it's working. You know what I'm saying? It's working. UCAT. Based off the weekend analysis, we just had a bullish channel pushing. We just had a channel pushing bullishly. We broke out of that channel, came back into that channel. Can't necessarily tell you I would have been looking for these shorts simply because we're bullish price action here. Once we came back down to this bottom, we found, okay, we'll see. High, low, high, consolidation, new high. Came down, started liquidated these levels and gave a reaction. Didn't really shift the structure, so we came back down. Ran into demand like right over here. This demand down here that gave you new high. So potentially, if you was watching and you was sitting on the charts, like Wednesday, Thursday night, Thursday NY session, then you potentially could have caught price action reacting from this demand right over here. This one did shift the structure. So going into next week, what I would probably be looking for is 50% retracement of this impulse move right here into the highs that broke the structure right here. Once you got the breaker structure, then you come back and get a higher low and break this high, then you have a shift structure, then you definitely know you can get active for buys back into the highs right over here. So that's all I got for this one. This is called compare and contrast, because what I do is I come and I show my weekend analysis from the previous week, and I show how the markets actually played out based off of what I saw in the market. So I'm gonna holler at y'all. I'm getting ready to do this weekend analysis for this week. March 6th through March 13th? Let's see. March 6th through March 12th. There you go. March 6th through March 12th, and see how we can get active in these markets. I'm out. Holla at your boy. Like and subscribe. Thanks for watching. I'll see you when I see you. Peace.